Whole life insurance is a ripoff, or is it just a ripoff to those who don't understand it? My name is Carmen.
And I'm Darius. And insurance is mandatory for most things in our life. Well, the most important things, like our home, we have to have insurance for our house. Even if we're renting, we have to have renter's insurance. We have to have car insurance, and we even have insurance for our electronics. And not to mention
Our electronics, yeah.
And not to mention the bank. We have insurance for our money in our bank up until $250,000, right?
Or 200. It's changed.
Oh, really?
Yeah, 200,000.
Well, in any event, it's mandatory for all those things except on our life. The one thing that's guaranteed in our life compared to your house burning down or getting into a car accident, what's guaranteed is the fact that you will eventually pass away. But it's not mandatory that we have life insurance. So
What do you think that is?
I have no idea.
It's another video.
Yeah, it's another video.
But I was making that cheeky statement in the fact of like the decision is now up to the consumer, and the consumer has to prioritize the life insurance as far as what value does it mean to them. And what we want to at least discuss through this video is making sure that you understand the importance of life insurance and which type of life insurance makes sense for you, and not just going with whatever you hear, because a lot of times we make financial decisions based off of the things that we hear or the things that we see or whatever our neighbor says, but we don't really take the time to either do the research, understand everything behind it so that we can make sure we have the best products for ourselves. So what I want to start off with is just sharing the difference between term and whole life insurance. And I want to, again, kind of start to peel back the layers so that you can understand that whole life really isn't a ripoff. It just, you have to figure out what do you want when it comes to life insurance. There's so many different features and benefits that come with life insurance, but you just have to know how to use them. And I think what happens is people don't know how to use them, so they think they're overpaying and they don't understand the value of what it is that they're paying for. Right. It's like buying a Ferrari, but not understanding how to drive it.
Right.
When you could have just had a Toyota Camry.
Right.
So thinking about term insurance, at least in our industry, since we are licensed agents, is definitely, I'd say, more popular. And the reason why we think it's more popular is because it's more affordable in the sense of you're going to pay maybe $25 a month, maybe $50 a month, depending on your age, and you're going to get a larger death benefit. And the reason why this is because the word term. You're buying insurance for a specific term, meaning this is not permanent. This is something that's going to last you a short period of time. So you have to understand that when you get these term insurances, it's only going to be for maybe 10 years, 15 years, 20 years, or whatever your contract is. And understanding that after that 10-year mark, if you have 10-year term, that in year 11, you may no longer be covered with life insurance.
Well, you will be, but the cost of it is...
it goes up.
It goes up
if
significantly
you pay your premium,
compared to what you're paying right now.
Exactly. So what you then have to realize is that if you continue to get term insurance, you have to renew, so to speak, your insurance every whatever new contract period that is for you. And some people that makes sense to them, some people it doesn't. The thing that we also want to talk about is if you have 10-year term, for example, and I'm just using this so that you can go with me along these lines, is that if you have term insurance for 10 years, 10 years goes by, then year 11, you try to get more insurance. You're now 11 years older. And it's no guarantee that you are insurable because something could have happened with your health throughout that decade. And your premiums, meaning the cost of insurance, is going to be way more expensive. So just off of that understanding, does this make sense for you? And for Darius and I, we didn't quite understand those fine nuances. We just knew that we checked the box because we started with term insurance. We're we have life insurance. We're adulting. Right. Where we have life insurance, we're good. Now, on the contrary, we have whole life insurance, and we're specifically talking about dividend paying whole life insurance. And just off of the title, whole life insurance, that should tell you that you are going to be covered for your entire life. So you don't have to worry about these terms and renewals and things like that. You are covered from day one until the day you die. So some people like that piece of assurance so that they know that they don't have to continue re-upping their insurance every now and then, and that they are always covered. So whole life insurance does tend to be more expensive Why? Because they're covering you for your entire life and not just a short period of time.
Right. And that's exactly what our first point is the cost of insurance. Because when I think about the cost of term compared to the cost of whole life, I think the cost of it is just put in different places. Where whole life insurance is the same price regardless of what your age is, or goes up to, regardless of what your health is after the fact that you've gotten your whole life insurance contract.
Yeah.
Now, on
to reiterate, the price of your insurance, if you have whole life, should not change.
It won't change.
Yeah.
As long as you have a dividend paying whole life insurance policy, which what we're talking about specifically. Now, with term is you can keep your insurance, but then the price goes up. So I think in essence, over the time frame, whole life and term, you can kind of say they still balance out.
True.
Because at the end of that term, the reason why it goes up so much is because you haven't been paying it. You haven't been paying the entire amount. So they add all of the payments up together at the end, and you have a significantly higher premium for the same amount of death benefit.
Yeah. And again, these are just the little nuances that we want you to understand, because the cost of insurance can typically, when you just see something on paper, $50 versus $200, you're like, oh, I'm going for the 50 route. But then again, you don't understand exactly what you're getting. So the cost of insurance, don't let that be the determining factor of what do you do and then which one makes sense for you.
Right. And also when it comes to the time in which we get our life insurance policy, a lot of times what we do is we wait until we're older and we feel like we need it. But what we should be doing is getting insurance a lot earlier, because that's when it's the cheapest. The cheapest insurance that you'll ever get is the insurance that you'll get right now. And the longer we wait, we go up in age and our health isn't the same.
Yeah.
So of course we're going to have to pay a higher premium for a similar death benefit.
Yeah, that's a really good point. And then the other thing too, cost, if we're talking about cost, typically when we have a financial hardship, we let our life insurance policies be the first thing that we let go, in the sense of, oh, I can't afford this anymore. You know, we got to let this go and maybe get it again. But then one, do you ever get it again? And then two, the thing is God forbid something were to happen to you. Now you no longer have coverage for your family. However, you kept your car insurance intact. You kept your home insurance intact, and it's not a guarantee again that your house is going to go up in flames or that you'll get into a car accident. But like you said, Darius, it is a guarantee that you will pass away.
Right.
So that's definitely something that we need to prioritize and think about differently in our finances, because as this new year is approaching, Darius and I literally had a conversation about what are our financial goals, and life insurance was the very first thing. Like, all right, in our savings account, all of our premiums are covered for the year. We're good to go. How many more policies do we need to get so that we can increase the coverage for our family?
Right. And another thing when it comes to financial hardships and policies being the first thing to go is when you let that policy go, the next time you get a life insurance policy, you have to start over, and it starts over with a higher age. Yeah. So you just kind of threw away all of those years that you had that policy previously.
It's like refinancing your mortgage.
Yeah, exactly. It's like,
but it's just your life.
Right. And in that situation, it's a ripoff because of how that situation was handled.
Yeah, absolutely.
Now, the next thing is the fact that people hate the fact that you have to pay premiums every single year.
But you pay premiums every year with everything else.
Right.
All the other insurances.
But it's an option.
I'm preaching to the choir. I'm preaching to the choir. But yes, it's an option. And going back to the cost, it's an option for us, and we don't lock that in our budgeting or in our financing tools and go, this is a set fixed cost. However, we do that with our car, our houses, and everything else. But once that decision is now in the consumer's hands, we can decide whether or not that we want this.
Right.
Which is neither good nor bad, but this is why we want to again make sure that we stress the importance of you having life insurance and having the right product for you and your family, so that you can do the best that you can.
Yeah, and just like anything else, if you have to maintain a premium payment the same way you have to maintain your insurance, you have to budget for it. You have to be able to manage your funds. And life happens, things come up, but you can't let the stuff that come up affect what you do for the rest of your life, right?
Yeah, and also I
think the next generation, your family's life.
True. And why don't we flip like our mentality around these premiums? Because if you look at, for example, one of our premiums, we know that if we're going to pay $10,000 for the year for this one particular life insurance policy, and in turn that's going to spit out $600,000 in death benefit. Like, doesn't that excite you to know that all I have to do is pay 10 grand this year, and if something were to happen to me, my family explodes in wealth overnight?
You're tax-free.
Like, that should be something that we celebrate instead of dread. That's my thought. Maybe we're the weirdos thinking this over here, but again, it just understand. You guys see it all the time. How many times have you seen GoFundMe accounts, or you've seen families struggle financially because they've lost people in their lives? And if you know that you are doing whatever you need to do in your family's household to cover your family, like, that should be something that is celebrated, to know that you can sleep well at night. Like, if something were to happen to me, I know my family will be covered, the house will be paid for, they won't have any financial hardship to worry about.
Yeah, and that's just a testament to our specific situation. Not everybody's situation is the same as ours. That's why it's really important for you to see, to understand your specific financial situation based on the numbers and not necessarily how you feel at the time. You should make these financial decisions not by yourself, but with the most important people around you.
The collective group.
The collective group, yeah.
Now, go ahead in the comments, let us know, what type of life insurance products do you have? And also, if you want to know more about whole life and how Darius and I use whole life, definitely in the description below, click on our masterclass. We would love to serve you at the Wealth Nation.
One of the things that I think is key is our understanding of life insurance.
Yeah.
Because when it comes to our home insurance, our car insurance, we only need those things in the event something happens. There's only one purpose for them. When it comes to a dividend paying whole life insurance policy, there's other things that come in place that we can leverage to our advantage.
Yeah.
One of those things being the cash value that accumulates in a dividend paying whole life insurance policy.
We talk about this a lot, that there's something called leverage when it comes to whole life insurance. And that means that you can utilize the whole life insurance policy while you're living, as opposed to a term insurance policy. You can't touch it. You can't do anything with it. The death benefit goes to your family. With a whole life insurance policy, you can utilize pieces of your death benefit throughout your whole life, and utilize the cash that grows within that policy tax-free to your discretion.
What I'll say is the most important, or the biggest thing that people have trouble with, is their understanding of whole life insurance as a product, the product that it is, and how it's used.
Yeah, and this is the most exciting piece of it for me, at least.
Because we think we can only use the whole life insurance policy for our family when we die, but there's things that we can do with the life insurance policy while we're living.
And there's also other misconceptions that we will address, we'll get to. But the main thing that we want you to understand is, again, if we're comparing and contrasting, if you think about term insurance is if you pass, the death benefit goes to your family. There's nothing else that you can do typically with a term insurance policy. However, with whole life insurance, you have different options available to you. And it's important that you understand what that is. So the beautiful thing about whole life insurance is that you can utilize your policy while you're living. You can leverage the money that grows inside of your policy at your discretion. And that money that grows inside of your policy every time you pay your premium is called cash value. And cash value essentially is your death benefit. This is where a lot of people get confused. They think that the cash is one thing and the death benefit is another. They're actually the same thing. And the insurance company is just siphoning chunks of your death benefit to you that you can utilize today, and you don't have to worry about it in the future, in the sense of, if you pass away with money outstanding, they're going to deduct whatever you haven't paid them back from your death benefit, and the rest is paid out to your family.
Right. So basically what they're doing is, you have a contract for life insurance and you have, let's say, $1 million death benefit. Your cash value at a particular time is $50,000. You can use your death benefit or your policy as collateral to borrow that cash value, which is $50,000, while you still have that contract in force.
Yeah, exactly.
Makes sense?
Yeah. And for us, what we like to do is the cash that grows inside of our policies, we actually use that for our own financing abilities. So instead of us going to the bank and getting a loan or using credit cards or whatever the case may be, we actually look to our life insurance policies and see what money is available to us. And we utilize that money to finance the things that we need in life.
Right. And that brings us to our next point, which is there's more than one way to use the cash value your life insurance policy. Because even when you think about businesses use or leverage whole life insurance policies to pay executive bonuses. They use their whole life insurance policies to diversify the concentration of their net worth in their business.
Yeah.
We use our life insurance policy to pay our business taxes. We use our life insurance policies to invest. There's a myriad of things that you can use your life insurance policy for other than dying. Yeah. And the nice thing about it is, as long as you use the system and treat money the way it's supposed to be treated, meaning keep it in motion, and when you borrow, you pay it back with the interest, you have more money that you can use for your retirement that you can borrow from tax-free.
I like that point. And now when we talk about these benefits and features that you can have, you can see this just opens up a completely different world for you, which is why it justifies the cost of whole life insurance, because you can do more with it. And there's also different riders or add-ons that we can put onto a whole life insurance policy, which can help with critical illness. Like, God forbid we come up with a chronic illness, if we have a chronic illness and we're diagnosed with that, or a terminal illness and we're diagnosed with it, we can utilize a portion of our death benefit to pay our medical expenses. So now, again, we understand why the Ferrari might cost so much as opposed to the Honda, for example. And it's about understanding these features and benefits and knowing the power of them so that you can use them to your benefit. And again, going back to we were talking about the cash and why somebody would even want to do that. There are fees and whatnot that's involved. So we're not going knee deep into those nitty gritty details. But again, if you want to know more, definitely click on the link below. But the reason why we continue to use our whole life insurance policies is because the cost of using our policies is far cheaper than us using the banks.
Exactly.
And that's why this is something that we prioritize, because we recognize that we literally have to finance everything that we want in life. We either have to save the money up to buy something, or we have to go in debt to do it. So we're just using our life insurance policies as that financing vehicle.
Right. And it's all a part of the game that we play as human beings in this society, is the fact that when we go to a bank, we're getting access to a pool of funds. So if we're getting access to a pool of funds, we have to pay a fee for access to those pool of funds. And when we borrow money, we have to pay it back with interest. Why not create our own pool of funds so that we can benefit from the fees and the interest that we pay, so that we don't have to necessarily go to somebody else's bank? We have our own.
Yeah. And also, too, when we think about leverage, liquidity, control, all of those things really are synonymous with being able to use a whole life insurance policy, because you can use it at your discretion. You don't have Big Brother talking about taxes or any other thing, like as opposed to your retirement accounts or how much you can or can't take. Obviously, you can't over leverage the policy. Whatever is there. But you don't have any restrictions. Like, if you have $50,000 in the account, you can use the $50,000, not just 10. So that's the other thing that we really like, is the control and the fluidity that we can access the cash that grows inside of our policy.
So the moral of the story, or the most important thing, is that you plug into a system in which you'll consistently use, because what's going to happen to us is we're going to eventually die, right? Up until that time, we have the ability to accumulate funds and use funds while we're living for our benefit and for the benefit of our family. So what situation can we put ourselves in that allows us to do that at the optimal level?
Yeah. And going back to, cost and how people don't understand it, we do have a lot of people out there who go, yeah, I have whole life insurance and I borrowed from it. I just never paid it back, because either you didn't know about being able to pay it back, or it's just something that slipped your mind. But the minute that you pay any loans back to the insurance policy, guess what? That money is available again. Right. So now this whole system that you're talking about really becomes a personal line of credit, because the minute exactly like a personal line of credit, you take the money, you pay it back, it's available again. We just continue to do that same cycle using one system, which is a life insurance policy.
Right. And here's the thing, when it comes to a life insurance policy, a traditional life insurance policy, you don't see a lot of cash accumulate in that policy quickly. What happens initially. So what we do with our policies is we have to design our policies specifically for cash value growth, So our policies will look a little different from a traditional policy. So we'll be able to have money available in that policy immediately. It's kind of hard for you to wrap your mind around it if you looking at your life insurance policy and you say, hey, I only got $57 that accumulated in my policy. How does he have $50,000 in his?
Well, yeah, it's like when you design the Teslas. Do you want the long range or you do want the sport one? So It's just about the different design packages or the chassis, the different chassis that are built within these policies.
Yeah.
And you can do that with life insurance. You just have to make sure that you align yourself with an agent such as ourselves or our team who knows how to do that properly.
Right. And the next question we always get is, can I make those adjustments inside my existing life insurance policy now? And the answer to that is no, because when you got your life insurance policy, it locked you in basically at that particular age and health at that particular moment. And if you were to change anything, you would have to go back and look at your health and look at your age and get you another life insurance policy.
And that's another question. Can I have multiple life insurance policies? Yes, you can. And it really just depends on your income. The insurance company is going to be the one that is going to tell you, all right, you're tapped out or we can keep this game going. Mm-hmm. So between Darius and I, our family currently, we have 6 policies, just to put things into perspective. But we know, our peers and others in the industry who have 20 and almost 100 policies at this point.
Right. Now, another question is, why do you have 6 policies instead of just 1? The reason being is, at the time we started our first policy, we didn't have the income to support the other policies that we've gotten. So we've allowed our system to dictate the amount of policies that we have.
Yeah, and in simple terms, it's we all hope, I'm talking to the audience, everyone, we all hope that our income increases, right? And if your income increases, that means that you should have death benefit to cover the increase in income. Mm-hmm. So that's really what it is we want to make sure that our life insurance policies keep up with the income that we're generating.
Right. And the last thing is the fact that a lot of people talk about buy term and invest the difference, or buy term now, and as your income increases, you don't even need life insurance. Your income can take care of your family when you pass away. Here's the thing when it comes to that. Your income may be able to take care of your family, but what's wrong with giving your family even more income?
Yeah. It's I don't want to say like a scarcity mentality, but almost kind of like a scarcity mentality of like, oh, just do the bare minimum, and hopefully your investments will cover your family. Yeah. And for me, I don't like hopefully. Something were to happen to you, I don't want you to sign a note, hopefully, Darius. Right. I wish I did more, Darius. No.
Or let's say we have a business and the business doesn't sell as much as I think it's going to sell for.
Exactly. Yeah, and that's what I'm saying is all of these non-guarantees. Whereas when we think about whole life insurance, the cash that grows inside the policy is guaranteed. The death benefit is guaranteed. There's nothing that we have to argue. That what's on the contract is what's going to be delivered to us. And for those people who do the term or invest the difference, what typically happens is if you buy term insurance, yes, you're saving a little bit from a cost standpoint up front, but on the back end, now you've taken all of your savings, put it into the market, put over to what investments, and now that money is dependent on the growth of the market. And God forbid there's any downturns, now we just lost some money. Right. And that's less money that we're able to continue to provide for our family. So for us, we would rather pay I don't want to say the I word, investment. The reason why I'm saying investment is invest in my family and myself by securing this life insurance policy. Life insurance is not an investment, but I'm just, you know what I'm saying? I'm sharing the fact that this is something that's important to me, and this is the money that I have set aside for this. Right.
And again, we all have our different experiences and the different things that happen along our journey that makes us very intentional about buying life insurance for ourselves, just so we can make sure that no matter what, our family is protected. Your situation is different. That's why you may opt to buy term, which is perfectly fine. You can buy term and convert your term into whole life. Yeah. Just make sure you have a plan for what you want for your future family.
Yeah. And as you're making financial decisions, keep the future in mind. Typically, we make financial decisions with just like today and tomorrow in mind. But if you think about life insurance and is this something that I'm going to need long term, you're definitely going to want to just think about what is important to you now and what do you think will be important to you 10, 15, 20, 50 years from now.
Yeah. So is whole life insurance a ripoff? It is, depending on who's buying it.
Yeah, because if you're not going to keep it,
It's a ripoff.
it's a ripoff.
The same thing with your term. If you buy a term and you don't use it and that premium goes up, it was a ripoff.
Yeah. So our argument is it's only a ripoff if you don't use it.
Right. If you want more information on how life insurance works and how you can use it in your particular investment or your lifestyle, then check out the link below for more information.
And also check out our next video where we talk about how we use life insurance as a banking system for our finances. And remember to own your own lifestyle.
Or someone else will.